Imagine global money going through a quantum shift, from old school spreadsheets to on-chain 24/7 markets. Latest research suggests hedge funds are no longer watching from the sidelines. They're logging in, wiring capital, and taking real crypto risk. We're talking about serious players here. Over 100 hedge funds and institutional investors worldwide, together managing close to $1 trillion in assets. So when they move even a few percent into crypto, that's real size, not just retail hype. Latest numbers show 55% of traditional hedge funds now have some crypto exposure, up from 47% last year. On average, they're putting about 7% of their assets into digital coins and tokens, but more than half still keep it under 2%, treating it as a small but high conviction slice. And here's the plot twist. 7 out of 10 of those already invested say they plan to increase their crypto exposure in the next 12 months. Experts believe hedge funds still love derivatives the most. About 67% of invested funds trade crypto futures and options, up from 58% last year. Spot trading, buying the actual coins, has also climbed from 25% to 40%. They're using regulated crypto ETFs and even tokenized assets, and some are buying claims from past exchange bankruptcies to squeeze out extra returns. Stablecoins are quietly becoming the on-chain cash layer, with total issuance jumping from around $200 billion to over $280 billion this year. Decentralized finance is the next lab experiment. Around 43% of traditional hedge funds with crypto say they plan to expand into DeFi over the next 3 years. Almost 1/3 think DeFi could seriously disrupt how they operate. But they're still nervous about smart contract risk and legal grey zones. Still, just under half of hedge funds have no crypto exposure yet. About 50% of them say it's simply outside their investment mandate. Roughly 29% are worried about tax and regulation, and others fear reputational risk. When the rules and mandates relax, a decent chunk say they'd be willing to reconsider. Now zoom in on the pure play crypto hedge funds. Their average fund size has more than tripled in just 2 years, from about $41 million to $79 million, and now $132 million. They're mostly under $1 billion each, but growing fast. Their favorite coins? Around 86% hold Bitcoin, 80% hold Ether, and a big jump in Solana holdings, now 73%, up sharply from 45% last year. XRP shows up in about 37% of portfolios. Most crypto funds aren't just sitting on coins. Roughly 73% are running yield strategies, especially custodial staking at around 39% and liquid staking tokens at about 35%. So returns come from both price moves and on-chain rewards. On the allocator side, latest research suggests about 2/3 of institutional investors already have some digital asset exposure. Top reasons? Asymmetric upside for about 35%, and both diversification and long-term outperformance for roughly 18% each. Crypto access is mostly through hedge funds. Around 59% of investors use fund managers, with others going direct into coins, venture funds, or digital asset equities. And 41% say they would increase their allocations if custody and trading infrastructure felt safer and more institutional. Among investors who still have zero crypto, around 70% are in pure research mode. 20% say they probably won't invest in the next 3 years, and roughly 10% are close to starting. The biggest blocker isn't always regulation, it's lack of conviction, which about 40% openly admit. Experts believe the fast-moving US regulatory shift is a major catalyst. New crypto task forces, clearer rules for banks to custody digital assets, and formal stablecoin frameworks are giving institutions more comfort. Among hedge funds already in crypto, about 57% say this clearer environment boosts their willingness to invest, and nearly half of institutional investors say it's encouraging them to add more exposure. Looking forward, tokenization feels like the quantum layer on top. About 1/3 of hedge funds are already exploring tokenized fund units, and over half show some interest. Around 15% believe tokenized funds could become the industry standard within a decade, while a 55% majority expects tokenized and traditional structures to coexist. Put simply, digital assets are no longer a side quest. The real question now is how fast this quantum shift scales and which players ride the next wave instead of getting left behind. If you find this video informative, hit the like and subscribe button. I'll see you in the next video. Until take care and bye-bye.